Mr. Market, aka the stock market, does not want you to become rich. The market only wants to move. It just wants to glide with the waves. We need to be a surfer. We need to understand these waves. Like the wind, the market can go up and down, low and high, lots of pressure, lots of selling, and just like the weather, everyone is screaming they know what the weather will do tomorrow. But who knows for sure? I do not know. I'm saying for the coming 70 years that I will live, I will never know. Only Mr. Market knows for sure. Mr. Market is only the guy that is knocking on your door every day to ask for a price. So how can we prevent Mr. Market from taking all our money? Let's explore together how we can beat Mr. Market while not losing any money. Welcome back guys to a new episode of Let's Invest. My name is Julian Karsten and you are watching the most action-packed show about building personal wealth. Our main goal on this channel is to not lose any money. Not losing any money, that is actually another item on the checklist. The checklist is 7 items strong at the moment, and it will keep on growing over the coming months as we hone our investment strategy. If you haven't seen the first 6 rules of the checklist, by the way, make sure to watch the last 2 episodes, in which I discuss rule 1 to 6. These are very fundamental rules about asset allocation, diversification, and the way that we invest. For example, using dollar cost averaging methods. Here is a quick thought experiment. When your portfolio goes down 15%, how much percent does your portfolio need to grow to get back the original 100%? Do you know? Could you guess? Maybe calculate it? Well, it's 30%. So it's double the amount you lost. Losing 20% of your money means you need to make 40 to get back to the original 100. Since the last time we've seen each other, a lot has happened to our portfolio at Trading 212. In total, we got more than 8,000 euros in the portfolio. 8,240 euros to be exact. I've added quite some money over the past 3 weeks. I've done some large deposits of 750 euros each every week. And we are close to our first goal of 10,000 euros in the Trading 212 portfolio. But we've been smart with the money and we haven't dumped all our money in the market yet. We've bought into 3 shares of Realty Income Corp in the form of a real estate investment trust. This is our real estate investment of around 9% in our portfolio. Next to that, we bought 113 medium-term debt bonds of US Treasuries. We invested in the iShares 1 to 3 year bond ETF. This is a basket of medium and short-term bonds. So in the bond strategy, I diversified quite a bit. We bought 33 shares of the largest commodity ETF on Trading 212 that I could find. This is an interesting ETF. It has, for instance, a percentage of it in cattle, hogs and cows, but mostly it holds metals. Commodities are good for when inflation hits the market. Prices go up, commodities go up. So it's a play for me to hedge against high inflation. But this ETF is very much exposed to gold. Almost 18.6% of this ETF is held in gold or gold derivatives. This is a lot since I already have a large portion of my portfolio invested in gold, as you will see later on in the video. We bought 8.5 shares in the Vanguard All World ETF. We're not focused when it comes to investing in stocks right now. I do not want to put all my money in the American market. This ETF tracks a large set of stock markets all over the world. So it's about diversification, and that is one of our core rules. But still, this ETF is focused quite a lot on the US market and maybe a little bit too much for my taste. But we'll see in the future what we'll do about that. And finally, our shiny safe haven asset gold. We didn't buy physical gold. We bought 16.4 shares in the gold ETF of iShares Physical Gold. Again, this is not physical gold. This is a derivative, an ETF. This means that I don't hold the gold myself, but there's a bank in England that actually guarantees the physical gold for this ETF. The man of action is favored by the gods of luck. The more times you roll a set of dice, the higher the likelihood that you eventually will hit double sixes. We need to be able to act when the time is right. Great opportunities are rare, but when they come, you need to be able to grab them. That is also why our entire portfolio is almost 3/4 still in cash. We haven't broken our rules. We've sticked to the plan of investing using the dollar cost averaging method. So let's take a look at Mr. Market together and see if there are any of those opportunities that we spoke about. Are there opportunities to strike hard? Since the market highs of February 2020, the market is down only 10%. This is crazy to me. If you look what's going on in the world, almost 40 million people unemployed in the US. And how many of those will stay unemployed? Next to that, riots in the streets of the US. But why is the market only down 10%? That is crazy. But it's because you will never be able to fight the Fed. Our drunken Uncle Fred is fighting on the side of Mr. Market in the boxing ring. And when Uncle Fred is down there, you do not want to fight the market. FANGM stocks, they are pushing the market. Their overall weight is more than 25%. So when those stocks go well, the market does well. And finally, retail investors are going bananas with their stimulus checks. That is what people are saying. I don't know if it's true, but it could be true. So what is your strategy? Are you all in when it comes to the markets? Or do you think this is just the beginning of a new rally with all-time highs and that we should not care about these crazy price-earnings ratios? Or are you more like me? And are you trying to make just a marginal return in these crazy times while you make sure not to lose any money? Let me know your thoughts and go ahead and drop a comment below, and I'll see you in the next video. Thank you very much.